Have you ever felt like the stock market is just a game that you're designed to lose? Well, today we're going to break down why it can feel that way, and more importantly, how you can actually flip the odds completely in your favor.
It's a really common feeling, isn't it? That sense that the whole game is stacked. Just when you think you're getting ahead, the market does something crazy. And it feels like the big players on Wall Street knew it was coming all along. And this quote from Warren Buffett just absolutely nails it. It's the key to this whole thing. It tells us that winning isn't about being the smartest person in the room or having the fastest computer. It's about temperament. It's about having a totally different relationship with time.
So when we say the market is rigged, it's really easy to picture some kind of, secret backroom deal. But the reality is actually a lot more subtle than that. And understanding what's really going on is the first step to beating it.
See, the rigging isn't some secret conspiracy, it's structural. The system is just built for speed and technology. I mean, think about it. You, a person, reading a news headline and making a decision are literally competing against a computer algorithm that can make thousands of trades in the blink of an eye. If you try to play their game of speed, you are going to lose. It's an unfair fight. Okay, so if the system is designed this way, it brings up a really important question. Who actually gets hurt by this whole setup? And what is it that makes them so vulnerable? Pretty soon, more than half of all trades on the market will be made by algorithms. And here's the thing you have to understand. Algorithms have no emotion. They don't feel fear. They don't feel greed. They are programmed to do one thing: capitalize on the predictable emotional reactions of us humans.
And this right here, this brings us to the most critical distinction of all. The market is an incredibly brutal place for the short-term speculator who's reacting emotionally and trying to outsmart the machines. But it's a completely different story for the long-term owner who just refuses to play that game in the first place. The people who get crushed are what you might call blind buyers. They're driven by hype, right? That FOMO, the fear of missing out. They chase prices that are going up without ever stopping to ask, hey, what is this business actually worth? This type of emotional, reactive investing is exactly the behavior those algorithms are designed to exploit. So if you can't win their game of speed, how do you win? Simple. You play a different game. Let's walk through the 5 core principles that give you a real, lasting edge. This is the absolute core idea. Stop trying to be a better short-term trader. It's a losing battle. Instead, start acting like a long-term business owner. That's your home turf. That's a game the algorithms literally can't play. And Charlie Munger, another legend, just said it perfectly. Real wealth isn't built by frantic activity. It's built by patience. Algorithms are built for speed. Your superpower is the ability to just wait. Okay, so this brings us to a really practical 5-part framework that gives you that edge. This is a disciplined approach that forces you to focus on what matters and just completely tune out the noise and the drama of the daily market swings. All right, principle number 1 is emotional attachment. You have to accept that the market does not care what price you paid for a stock. You have to think like a cold, calculating business analyst, not a fan cheering for your favorite team. This mindset is what lets you see incredible opportunities when everyone else is panicking. Number 2, fundamental analysis. This is where you actually do the work. You dig into the business itself. How much money is it making? What do its profits look like? How strong is its balance sheet? You've got to remember, you're not just buying a ticker symbol that wiggles around on a screen. You're buying a piece of a real company. Third, and this one is absolutely non-negotiable, you have to demand a margin of safety. So if you do all your homework and you figure a business is worth, say, $60 a share, you don't buy it at $60. You wait. You wait until you can buy it for $45, maybe $40. That gap, that's your safety net. That's your protection against bad luck or just being plain wrong. Number 4 is this huge mental shift to long-term ownership. You're not renting a stock hoping you can flip it in a few weeks for quick profit. No, you are buying a piece of a business that you plan on being partners with for years, maybe even decades. And finally, number 5 is process discipline. This means you use a consistent checklist, a repeatable set of questions for every single investment you look at. This creates a system, and that system keeps your emotions out of the driver's seat and puts logic in charge, helping you avoid those impulsive decisions. Now, all these principles sound great in theory, right? But how do they actually work in the real world, especially when the market is going completely haywire? Well, let's look at a perfect case study. A couple years back, Meta stock was in an absolute freefall. I mean, it was collapsing.
And the story, the emotional narrative that everybody was talking about was that the company was toast. Zuckerberg was done. The market was in total panic. But if you practice that emotional detachment and you actually did the fundamental analysis, you saw a totally different reality. The stock price was getting destroyed, sure. But the business? The business still had 3.5 billion users, was gushing free cash flow, and its revenues were still growing. You see, a disciplined process boils down to asking a few simple but really powerful questions like these. While everyone else was freaking out about Meta's stock chart, a disciplined investor was focused on its long-term future. And at that rock-bottom price, the opportunity was just staring you in the face.
So let's wrap this all up and bring it back to you. In a world of supercomputers and high-frequency trading, it is so easy to feel like a small fish in a big pond. But you have an advantage, a superpower, really, that no algorithm can ever copy. Your true edge is your humanity. It's your ability to be disciplined when everyone else is afraid. It's your ability to think in decades, not microseconds. And maybe most important of all, it's your patience. The ability to just do nothing and wait. A machine can't do that. So in the end, it all comes down to a choice. You can't control the market, you can't control the algorithms, but you have 100% control over which game you decide to play. Are you going to play the high-speed, high-stress game of speculation, or the patient, rewarding marathon of ownership? The choice is yours.